Is Poland's high-flying economy about to face a hard landing? Since emerging from communism over 30 years ago, Poland and other Central European nations have basked in the glow of an economic golden age. That success has even triggered panicky headlines in post-Brexit Britain that it would be overtaken by a country viewed as a basket case for much of the 20th century. Tonight I go on the record with leading Polish economist Jakub Borowski to ask the question, is Poland's new prosperity under threat from the implosion of the global economic order? But first, a short report.
Since overthrowing communism and rejoining the West 3.5 decades ago, Poland and its Central European neighbours have come a long way. One only needs to look at the data. Having just surpassed $1 trillion, Poland's gross domestic product, the value of goods and services produced in the economy, has risen 15-fold in the past 35 years. And growth isn't slowing down. With the Polish economy outperforming its regional peers, the IMF projects GDP growth of over 3% this year. At current growth rates, Poland could even surpass Britain in GDP per capita, a widely used metric for the country's wealth and productivity, early in the next decade. But while Poland's economy has proven resilient, rising deficits and debt are a growing concern. Surging defence spending since Russia's invasion of Ukraine has caused Poland's budget deficit to balloon to nearly 7% of GDP. That's the second highest deficit in the European Union when measured as a share of the economy, trailing only Romania's 9.3% shortfall.
I don't think 6-7% deficit is sustainable. We should start thinking about reducing those deficits.
Rising deficits have caught the attention of credit rating agencies like Moody's and Fitch. Last month saw Poland's fiscal outlook lowered to negative, and this could be the precursor to a downgrade of the country's debt. Poland's debt is on an upward trajectory, expected to leap past 60% in the coming years. And with interest rates still high, it's not just the debt itself that could become an issue, but the cost of servicing it.
Debt servicing costs. So this is the most important indicator that should be observed and monitored and might impact fiscal policy.
Demographics are another headwind, especially in the long run. With an aging population and one of the lowest birth rates in the world, Poland's population, according to the latest UN projections, could fall by half, from about 38 million by the end of this century. And of course, there's the lingering what if of external shocks, geopolitics, trade tensions, or the possibility of another global recession. A prolonged trade war between the US and China could undermine the economic order that enabled Poland's rapid growth, hitting Central Europe's export-dependent economies particularly hard. The combination of all these factors, debt deficits, demographics, and external shocks, could cause growth to slow.
In the next couple of years, it's more likely that the economy will be moderately slowing than accelerating further from the current levels.
So instead of the high growth rates we've become accustomed to in recent decades, more moderate growth rates, perhaps in the range of 2 to 3%, may become the new norm for Poland unless it reinvents its policy for the new age.
Kuba, welcome to TVP World.
Good afternoon.
So, since emerging from communism many years ago, the Polish economy has grown hugely, and I don't know if you remember this, but President Lech Wałęsa, the first president, the Solidarity leader, promised
it would be second Japan.
Second Japan. Oh, you knew.
We remember this.
You knew straight away where I was heading. So he said we would be second Japan, and everybody laughed at that time, both in Poland and abroad.
And we are there.
And then 30 years later, I read in newspapers that we are approaching prosperity levels similar to Japan's. What made it possible?
A number of factors, but I generally tend to think about the story as a typical convergence story. So you have a country with relatively
Please avoid jargon. Convergence story, our viewers
and
may...
I am explaining this right now. I am explaining this right now. So you have a country with relatively low level of GDP per capita, amount of capital, which is also relatively low. Productivity that is supposed to increase in the longer run. Then you open the country, you join the European Union, you increase your security because you join NATO. Then you have an inflow, a massive inflow of foreign direct investment, which boosts your various exporting branches, so exporting sectors. You diversify your output, you diversify your production. Actually, Poland managed to diversify the output more than the countries in the region. So we are more diversified economy than Czechia or Slovakia, for instance. So I would tend to call it a typical convergence, textbook convergence story. Nevertheless, some economists believe that there were many extraordinary factors that contributed to this long-term success story. So a coincidence of events. So
right. But if you
stability, security, European Union, etc., etc. So it was like a joint effect of all of those forces. Otherwise, we would be most likely still a converging economy, but not at that pace, not at that level that we have reached so
exactly
far.
Because many economists point out that in fact there's only one country in the world with a similar track record of growth, and this is South Korea. In a relatively similar space of time. There are differences.
Sometimes we are compared to China.
Yes, but the prosperity levels in China are certainly still lower there than in Poland. But we just saw the growth forecasts from the International Monetary Fund, and it shows Poland is going to grow around 3% this year, and again around 3% next year. Yet you and many other economists are saying that the party is over for the Polish economy. Can you tell us why?
The party is not over. It can be over in the longer run. What you referred to was the IMF forecast, and IMF forecast is a kind of medium-term projection, and that projection covers a couple of years ahead. And here we are, I would say, on the same page. So we generally expect the growth of 3% plus in the coming years, driven primarily by the greater utilization of European funds. This is the key factor, plus consumption, which is going to grow roughly at 3%, like being on the autopilot. This is what we say in our research.
So excuse me, are you saying that the EU funds that have been flowing in the billions since 2004, that this is the critical element of this?
In the short run, yes. So the pickup in investment that is expected this year, in the second half of this year, and primarily next year, this is the result of the accumulation of European funds. So we have this RRF, which is Recovery and Resilience Facility, that has to be spent relatively quickly.
This is the EU money for the pandemic.
Yes, but this related to pandemic, yes. And then we also have the Cohesion Fund for Poland, 75 billion euro, that is going to be spent in the longer period of time, but still we're going to see some accumulation of that money flowing into the country.
So is there an estimate how much the EU money has contributed? Let's say Poland is growing on average between 3 and 4% annually. How much of that growth is...
There have been various estimates on this, because it's very difficult to judge to what extent it contributed to.
What is it?
1 percentage point in annual in year-on-year growth, the contribution to the year-on-year growth. But let me come back to your question, because it's critical. So the question whether the party is over. And when we are afraid whether the party is going to continue, we are afraid in the longer run. So beyond 2027, around 2030, this is when that inflow of European money will slow down. Clearly, Poland will become a more affluent country. It will receive less and less money from the EU. But the question is, how will we tackle the issue of demography? Because demography will slow down growth in the longer run. The labor supply will shrink in the longer run. These are all the forecasts. They are consistent on this. And the hidden assumption here is that we will not have a massive immigration. Yes, and I think we can agree on this.
Politically, immigration
it's almost finished. Let me put it this way. So then we have a key question whether we will be able to compensate this negative contribution of the labor market, deteriorating labor market by rising productivity. And this is the assumption that is usually taken by the institutions like the IMF. They assume that Poland, still with relatively low productivity, still relatively low usage of AI, for instance, we are at the bottom when you look at the European countries in terms of...
So we have growth potential.
We have productivity growth potential that still may be used and compensate for the negative contribution of the deteriorating labor market.
All right. So why are you from time to time pessimistic? And you see particularly problems with, let's say, budgetary issues, debt accumulation, these things that you seem to be preoccupied with. And to your credit, also the IMF.
There is a very famous song of Sisters of Mercy, I want more. And I would like to have more. So clearly, if we have a greater growth potential driven by better demography, more people working, contributing to the growth in the longer run, we would grow not at 2%, after, let's say, 2030, or maybe at 3% or even more. So
why should an economy, why should an advanced economy, because Poland is reaching this level where you can call it an advanced economy, why should it grow at 4%? I mean,
because
2-3% is, I mean, many countries in the world would wish to grow at 2 or 3%.
This is a question, yes, I fully agree, but this is the question of your aspirations. So whether you aspire to be a middle-income country, pretty satisfied with the level of life, of the quality of life, or you want to get closer to countries like Germany, for instance, in terms of GDP per capita, in terms of purchasing power of your income. So of course we want to be there. Yes, this is I think it has been a consistent target and aspiration of economic policy in this country over the last 30 years. Yes, we don't want to be a middle guy. Yes, in the club.
I understand that, but some of the commentary, and for example, we had rating agencies recently signaling that Poland's debt is getting out of hand, that this may impact how Poland is viewed and the credit worthiness of Poland, if you will. And you seem to be sharing some of these concerns. So can we talk a little about this issue?
The metrics, so the fiscal metrics, is clearly not favorable. So the most recent forecast presented by the government suggests that that GDP ratio is likely to increase steadily up to 75% of GDP, which is
debt to GDP.
Debt to GDP ratio up to 75% of GDP. I think in 2028. Which is 10 percentage points higher than was envisaged last year. So clearly the situation deteriorated in this respect. But we have to take one thing into account. Well, on the one hand, it's growth negative in the sense that you have a greater burden
on the entire economy.
On the entire economy, on your public finances. You have to spend more on interest, etc., etc. But on the other hand, Poland is likely to grow at the same time, changing its status. Yes,
so some of the growth is going to take care of...
So we are getting closer to developed economies. And you know, if you look at the investors' perception, it has been changing as well recently. So when I talk to investors, I hear sometimes something that is not really heard here in this country. Yes, so they are saying, well, all of those countries in Europe, including developed countries, they have relatively high debt. Poland has still relatively moderate debt. Second, the story behind the debt increase is somewhat more positive in a sense that it's largely, not entirely, but largely driven by more expenditures on military, yes, so greater military spending. This is the investment in your security, so this is understandable. Sooner or later you will have to control it, you will have to tackle that issue. So as long as this is not kind of very explosive path, and as long as you have growth, and that is the source of my worry, I will explain it in a second. The situation is acceptable for investors. Look at what's happening the week before when we had the publication of this debt strategy by the government, the market did not react.
Yes, and the zloty is at all-time highs or close to all-time highs to the dollar.
Because stories, this is something that matter. And the story about Poland is now very positive. What can spoil the party? A shock. If we have a global shock, if we have a kind of asymmetric shock locally, for instance, some escalation of war in Ukraine, which might affect negatively the economic prospects of the Polish economy.
But this applies to everybody. I mean, you know, these days no one is immune to these trends.
Yes, but if you have a rising debt-GDP ratio, and at the same time the forecast of steadily growing economy at the rate of 3% in year-on-year terms, then it's acceptable for investors. This is what I'm trying to say, that they look at the broad picture.
I think they look at the United States, France, Italy, Germany. Everybody has the same problem.
But if the growth slows down rapidly as a result of any type of shock, and we do not forecast shocks. That's the issue. Yes. We do not forecast
Economists
shocks.
cannot predict.
They just come out of the blue. So
black swans.
Yeah, black swans is something very, very strong. But it can be, you know, something goes wrong in Europe, and we have a growth instead of 3%. Let's say we're going to have a growth of 1%.
Yes.
Then the investors' perception might change, because then they will see, okay, they still have relatively large deficit. They still want to spend. They have
but
to spend.
But they don't have enough growth.
They don't have enough growth. And then the situation might change quite rapidly.
So might is the key word here. Might change. So it's not exactly flashing red yet. And interestingly, you know, I wanted to ask you about this because, you know, this week we saw the Nobel Prize in Economics. And believe it or not, it didn't go to economists studying debt levels, which very often happened in the past, and how this is problematic for the world. This went to economists who basically study why countries grow and the relationship between competition, innovation. And given the situation in which Poland and other countries in Central and Eastern Europe, what do you think are the lessons from these Nobel Prize winners would be for this region? What are the key messages from their research to Poland?
The lessons are consistent with the major conclusion that we drew at the beginning of our conversation, so that we will need, in the longer run, the productivity growth that will compensate other factors.
That's a slogan, productivity growth.
Yes, but this was the core issue of their research, of the Nobel Prize winners. So they focused on the sources of growth driven by innovation. So these were the so-called endogenous growth models, in which...
Like internal.
Yes, in which you generally assume that the productivity is driven by the initiatives or action taken by investors, by companies, etc. So it's not simply assumed as in the somewhat simpler growth models when you exogenously assume that productivity will steadily increase.
One way or the other.
Here you have to take care of it. And
so is Poland taking care of it? And other countries in the region?
Again, as always, we might say Poland could take care of it more. If you spend more on research and development, if you invest more in education, and then we talk about, for instance, when we talk about wages of teachers.
So the social, cultural origins of growth.
Or very recent discussion in Poland about the underinvestment of universities, yes, and research at the universities. This is something that worries me. And if we think what might lead to the end of the party, as we frame it at the beginning, this is something. Yes? So I think, again, artificial intelligence, so the way we handle this issue, this is not only an access to artificial intelligence, but this is also about the way we manage to absorb it. And in order to absorb it, you need to have, for instance, high level of human capital. So
human capital is, you know, again, it's one of these terms that economists tend to use, but what does it really mean, human capital?
It means the way the people are prepared to work with artificial intelligence, whether they know foreign languages, whether they can use artificial intelligence to program in programming, in IT, etc., etc. So IMF made a study on this. They did the study on this, and they classified all the countries in terms of their preparedness for the absorption of the artificial intelligence, and Poland did not do well, unfortunately. So clearly we are focusing on the longer run challenges, and the work done by Nobel Prize winners from this year is actually focusing on the same thing. So if you want to sustain growth in the longer run, you need to generate productivity growth, and innovation is a key here, and institutions also matter, so you need to strengthen institutions. What does it mean?
Yeah, but we're living in an age where institutions are being undermined everywhere. In the United States, maybe not in Western Europe so much. But
that's again the question of relative performance, yes? So if it's undermined in other countries you compete with, and you don't undermine it here, then this is the bonus for you.
So is the current growth model in Poland and Central Europe exhausted, or does it just need fine-tuning?
It's not exhausted because it has been based on the inflow of foreign money, widely understood. So this is the inflow of foreign capital, private capital, which will continue, not at the pace that was seen before, but it will continue. And also the European money, which is going to continue to flow at somewhat lower pace in the longer run. So that growth model is still there, but that growth model will not generate the growth of, let's say, 4% plus. Right. This is something we have to forget if we do not combine it with other factors, if not demography. We said we sort of identified the reasons for the weak demography in Poland, as well as in other countries. This is not something peculiar for Poland. If not demography, if we cannot improve it quickly, then productivity gains. This is the key term that I believe is highly relevant for Poland in the next 2 decades.
Can the defense industry be a driver of growth, given that, you know, Poland and other countries are spending so much on defense? At the moment, it's mostly purchases abroad. But we've seen in Russia was predicted to collapse after sanctions and all of this. And we see that part of the reason why it has not collapsed economically is that it revived its defense industry. So can Poland and other countries in the region imitate that?
I think for Poland it's quite difficult because, as you know, we spend a lot of money on defense that is basically imported. So these are imported goods.
But can that change?
Unlikely.
Are there any signs?
Unlikely in the medium run. I don't think we are able in the short run to produce fighter jets that are equal to F-35.
Yeah, but today the modern warfare is less about planes and more about drones and
drones,
artificial
yes,
intelligence.
But if you want to move the front line, you need to have everything. If you talk to experts, I sometimes sort of take this opportunity to speak to military guys in a sense that they know the business very well, and what they are saying, you need to have everything, because the full-scale war, it's a complex matter. Today, of course, well, drones are in the first line, but you need to have tanks, you need to have planes, you need to have rockets, anti-missile systems, etc., etc. So most of those things are important. So we have a leaking of money outside. Yes, these are imported goods. This is public investment. And I don't think in the short run we might change it. So there are some branches that are sort of flourishing, as you mentioned, drone sector, for instance. But it's too small to generate significant contribution to growth. We estimated this some time ago. We are talking about the contribution of 0, something to
it's
GDP
negligible.
growth. It's negligible.
In terms of, we have to slowly finish. So I wanted to ask you at the end, you know, Poland and other countries in the region, they were the great beneficiaries of globalization, the end of the Cold War, peace, prosperity, freedom, and all of that. And now we see this world order being unraveled or changed significantly. There's major disruption because of the US tariffs, because of China's behavior, because of the war in Ukraine. Does that mean that this growth model based on globalization requires something special? What would be your advice to any government in the region? What to focus on?
I think we are quite well insulated to this, in a sense that, first, our or the European Union's total exposure to the US is limited, fortunately. So even if they impose tariffs, the impact of what was imposed and was the result of the deal with the European Commission between Trump and the European Commission is limited. So it was calculated only, and the impact on the EU economy and Poland's economy indirectly was
so what is the priority now?
I think the priority is to keep the EU working, in a sense that...
but that's a political priority, not an economic.
No, but this is an economic priority, in a sense that if you look at the whole world, you have tariffs there, you have tariffs there, you have generally the free trade collapsing, but still within the European Union, that free trade is still there. So, for instance, to give you an example that is, I think, highly relevant for quite a lot of businesses in Poland, we will have a new government in Czechia. Yes, and Mr. Babiš, as we know, is, I would say, quite reluctant towards various type of food businesses and food exporters in Poland, yes, because they compete with Czech businesses there. So how will he react? Whether he will try to sort of reduce that trade with non-tariff measures. This is something we have to...
So the internal cohesion of the EU.
The internal cohesion of the EU, this is something that we have to protect. I think that would be the response.
We have to finish. Thank you very much for joining us today.
Thanks for having me.
Thank you very much for watching. This was On the Record. See you next week.